Stock of State Bank of India is up close to around 28% in the last 2 months, and it is up 63% odd on a YTD basis. In fact, post a strong Q4 results wherein we did see the asset quality to be better placed than most of the other large private banks. State Bank of India had seen good amount of upgrades. In fact, CLSA had gone ahead and upped the target price to 650 per share. And to understand what exactly is happening at State Bank of India, the future of State Bank of India as well as the banking industry, it now caught up with Ashwani Bhatia, who is the Managing Director at State Bank of India. Mr. Bhatia stated that if you look at the Q4 results that were good, State Bank of India has gone ahead and revamped the system. They have a good platform. The next 2 years are likely to be good, and they have already displayed that in the results last year. I quote Mr. Bhatia, he stated, "I think if India grows, State Bank of India will grow with the economy. SBI has been ahead on the digital aspect, including the YONO platform, and going ahead we would see a combination of both digital as well as the brick and mortar business for the banking industry." He believes that the resolutions are going to be better going ahead, and also State Bank of India has put in a lot of good risk mitigation system. Banking system has become resilient. Credit cycle will look up with the large exposure framework by the Reserve Bank of India. In fact, he stated that we are seeing a lot of pent-up demand, and he expects demand to come back within the next 1 or 2 quarters. Of course, we need to watch out for the risk of any other COVID variants, but he believes that the credit cycle will look up with the efforts of the regulators. Reserve Bank of India as well as has put in a lot of efforts in terms of the overall large exposure framework, and SBI measures on the bond markets as well as the legal system has helped the overall banking sector. Speaking on State Bank of India, Mr. Bhatia stated that the last year the return on assets stood at 0.48%, and they have a scope to improve that by another 15 to 20 bips, which would mean that the ROAs can improve to 0.7%, and if at all that happens, then the ROEs in fact could improve to double digits, which is closer to 15%. In fact, Mr. Raamdeo Agrawal, speaking exclusively to ET Now, also stated that he believes PSU banks are at an early stage of the earnings growth cycle, and COVID hit segments, realty and auto are also a good place in terms of are also at the start of the growth cycle. CLSA also had stated on State Bank of India that FY21 slippages at less than 1.2% of the loans were the best in class. Corporate credit cycle is clearly turning, and retail slippages are at less than 0.5%, and CLSA expects SBI's ROEs to inch up to about 15% by FY23, and that current valuations on March 2023 book are fairly undemanding according to CLSA, and they had gone ahead and upped the target price to rupees 650 per share.